almost $2 million, which is a massive gain of 3,500. What is up, ladies and gentlemen, and all the investors out there? Let's discuss why dollar cost averaging or DCAing can be one of the best investment strategies out there. So first of all, what is dollar cost averaging? An easy example would be to spend $10,000 in a course of 1 year and spread it out equally. So each month or each week you buy an amount of Bitcoin, and this way you get an average price over the course of the year. You mitigate the price risk and manage the price volatility. It is an easy to follow strategy. You don't need to be a professional. For example, if you want to do day trading, many folks out there doing it on a daily basis, on a full-time job, and I read an article that 80% of day traders losing money. You can check this article, I leave it in the description as well. And the ones who make money with day trading, they are professionals doing it every day, and you as an average Joe, you cannot compete with them. So I don't recommend you to do that. To make money, that's our goal, and to do that we need a solid investment strategy. Dollar cost averaging can be one of them. I say it because you take out the emotional side of the trading and investing. Use this calculator to show you some of the examples. I leave the link down in the description as well. You choose the cryptocurrency, in this case Bitcoin. Let's use US dollars. We are going to purchase amount of 100 USD. You can choose the intervals. I'm going to do weekly purchases, and the range I want to go, let's say, with the past 5 years from 2018 June. And as you can see, if we buy Bitcoin every week, it would be 261 times, and the total invested amount would be 26,000, and the gain would be over 100%, which is really not bad. Let's see what we get if we double our range and we go back to 2013. Here we go. Our investment amount would be double, 52,000, and the total value would be almost $2 million, which is a massive gain of 3,500%. So as you can see, it's a very powerful strategy, but let's compare it to other investment assets. For example, the S&P 500. I have this calculator up here. We looked at 10-year range, monthly investments of 100 US dollars. Let's go with the same as we did before. Let's click calculate, and we get the results. In percentage wise, we need to look at the blue line, and we will see we get a good sum, 72% gain over the range of 10 years, which is not bad. But if we look at cryptocurrency, it's not comparable with this 35x gain. But let's see other ranges as well. Let's look at the past 2 years, for example. It's been volatile 2 years. June 2021, we invested $10,500 and we gained only 7.6%, which is still positive, to be frank. And if we look at the S&P 500 over the course of 2 years, let's see what we get. Just click 2 years, monthly basis, 100 US dollars, and the results are 6.7%, as you can see. So crypto outperformed the S&P 500 in this case as well. Let's just go through a couple of more years. let's look at the past year, not 40%. Let's look at the past 6 months, for example, 24%. Let's look at the past 3 years, for example, from 2020, when the COVID hit. After the COVID hit, we get the amount of 25%. So as you can see, almost all the time it's a good investment strategy. It's a positive ROI, instead of just taking a risk and investing your money in one giant lump sum at one go and hoping for the market to go up. It might be better to use this dollar cost averaging strategy, because when you invest your money in one go, you probably hear it in the news or heard it from someone that he made some money on crypto and Bitcoin, and probably that's the worst time when you can invest, because that's the FOMO and everyone wants to get into Bitcoin, and a big crash can be expected after that. So in this case, dollar cost averaging can be a good strategy. I also want to show you my numbers that I use. I've been investing into Bitcoin and Ethereum around 50-50 for the past years, as you can see, 2022 June, and it's not exactly dollar cost averaging because I wasn't buying at this exact same intervals, but I tried to buy the assets every month, and as you can see, here are my price and the amount I invested, the BTC I got. And if we look at the average of this, it's 21,000, but we need to weigh it by the amount I bought. So for example, I invested here more heavily, so I think my average price is a little bit above that, like 22,000, 23,000 BTC. And if we look at the price today, it's 29,000, so I'm in a profit. Happy days, and I'm hoping for some more gains in the near future. If we go back to my table, and if we look at Ethereum, for example, you can see the prices that I bought Ethereum for. We get an average of, let's say, $1,500 per ETH, spread out in the last year. And if we look at where the price stands today, it's 1,800 ETH, so we also in a profit with that. I hope this video was helpful for you. I could convince that DCA or dollar cost averaging can be a good strategy when it comes to investing in Bitcoin, crypto, or any other assets out there.